All right. Hey, good afternoon, everybody. Isaac Bursch, grain manager here at FCS. Got PJ Frederick on board with me here. He's one of our risk consultants from StoneX in West Des Moines. PJ, glad to have you on board.
Great to be here, Isaac.
Just wanted to give everybody a recap on what happened today. Planning intentions and stocks. I know it's not quite the Super Bowl of crop reports, but it's definitely one of the bigger ones of the year. So today we saw old crop corn May contract up 11 cents. New crop corn was only down about a half. Old beans up about 28 to 30 and new beans up 16. So, maybe a few small surprises in the report, but I think generally speaking, as far as these go, it was more mundane than we typically see.
Yeah, in terms of versus the expectation here, we did have going into the report a very wide average trade estimate. Isaac, we're looking at 600 million bushel swing in potential trade expectations on corn stocks. On beans, it was like 300 million. So the stock side had a wide trading estimate. Over on the acreage side, you were looking at 5 million, give or take, on the corn. So really a coin flip coming into this market here today. As you mentioned, we did have May corn trading up 11, and we continued to see spreads invert here in the corn market, but really a relatively low trading day overall in the volume in old crop corn. You look at beans, we did have a very strong day in the bean end of things. Coming into this report, we were looking at 87.5, and it was a number that basically matched the ag outlook for them in the bean end of things. And that drove prices here a little bit higher. As we look at the maps, you're looking through the upper Midwest here on a corn acreage planning intentions from today's report. So this is going to be the top number will be current intentions from the report, and the number underneath it is a change from final planted last year. So a couple things that ring true here. You look at 200 million bushels across the I-states, an increase of 200 million acres in Iowa, 200 million acres in Illinois, and 250,000 acres, 200,000 across pretty much all those, but 250,000 acres in Indiana. You look up in the Northern Plains, we do get kind of a surprising look here at 800,000 more North Dakota corn acres in this report. So, for reference, last year from March to June, we cut out roughly 600,000 corn acres up there, and a lot of snowpack up there is going to keep us on our toes, and the market's going to really be watching that Northern Plains snowpack here as planning rolls along. Again, these are intentions, given that we haven't planned anything at this point. Down the Southern Plains, they had a drought issue last year, so these numbers will be versus the planted numbers. Down there, they did not harvest a lot of those acres last fall due to drought in the Southern Plains. 92. Go ahead.
Obviously, everybody has been watching markets lately, reading commentary. There's starting to be more chatter on what ultimately happens in North Dakota and northern Minnesota. They are forecast 15 inches of snow next week with a high of 37 in Fargo over the next 10 days. So, there's definitely going to be a variance from intentions. It's just a matter, I think, of obviously how fast things can dry out up there as it gets going.
Yeah, drying weather doesn't look good. And you look out to April, May, and they are below normal temps up there too. So on top of already 20, 22 inches in Fargo. So it'll be interesting to see progress there over the next few weeks. You look at over on the bean end of things, nothing real crazy in the bean report outside of, again, 850,000 additional soybean planted acres up in the Dakotas, North Dakota in particular. Between the two, you're looking at slightly over 1 million more soybean acres up that way. As you look down in the Southwest, you are looking at Kansas slightly lowering their soybean acreage number, probably looking to make up for some corn and potentially tearing up some of the winter wheat crop that is somewhat droughty in those areas. Really, all in all, pretty much as expected soybean planted acre number. Flip over to stocks here. We're going to look at corn stocks throughout the Midwest. And what you're seeing is obviously lower year-over-year stocks in the droughty areas of the Southwest. When you look at Iowa, this is probably a factor of corn production more than anything. Down 128 million bushels versus the previous year. Out in Illinois, decent production last year, 214 bushel per acre yield for Illinois last year, bringing their corn stocks higher for the March 1 reporting period. One thing to mention there is they did have a strong amount of disappearance, and a lot of that left via rail, Jan, Feb, out that way. So something to keep an eye on as we go through the rest of the summer here. Here's a look at national March 1 corn stocks. Again, looking at disappearance here, I think production on corn is probably adequately stated, but lower than the previous years here, and a decent amount of disappearance overall relative to the last couple of years. You look at soybean, switching over to soybeans here, we are seeing a Southwest Plains, again, droughty conditions out that way. Dryland Nebraska beans were lower production. You get lower March 1 stocks out that way. Interesting to look at the Illinois number here, 68 million bushels lower March 1 than a year previous. And what we're looking at there is a strong soybean export program leaving the Illinois tributary river system and moving south, as well as some rail that way. So as we look at other things that really in soybeans, you have export and crush. And looking at soybean crush nationally, we are maybe slightly behind where we thought we'd be at this point in the marketing year due to some weather concerns in the Western Midwest. So that was maybe a concern coming into this report, and really didn't seem to be, that was somewhat unfounded once we got the results. So really thinking maybe there's a production question here on how many soybeans were actually produced last year, but looking at lower soybean stocks than the previous March 1 report, and but higher than the 2021 crop year. What's this mean for the balance sheet? And I think this is important as we look at from a grower's perspective, marketing our new crop. I held in the yellow here, I held the Ag Outlook Forum numbers from February constant for the demand side of things, but I plugged in the 92 million acre number we saw today nationally with a 181.5 trend line yield. And that spit out a carryout over 2.1 billion bushels. So important to look at this as that is a considerably looser balance sheet than we have seen in the most recent marketing years. Now, 181.5 is trend line yield. There will be some doubters out there as to whether we see that yield number, but as we look at a 15% potential carryout to use with a strong growing season, I think that that's potentially eye-opening to the marketplace, and a reason we saw new crop trade-off here today.
Yeah, I think you look at it though, all things considered, diesel only being down 0.5 cent, March being only down 0.5 cent, pretty good day for new crop corn overall, which would lead you to believe that there's definitely some embedded concerns on what kind of acreage number we actually come out with.
Yeah, fair point. As we look over here on the examples here, I am kind of playing with the numbers and did lower yield in these. So a 178 national yield, a 180.5, and then really playing around here with the demand end of things, making a lower demand case here on the left and a higher demand on the right, and what that does to carry out to use. So it's not going to take an outrageous yield nationally or an outrageous growing season to definitely loosen up, potentially loosen up the corn balance sheet. Over on the bean end of things, we certainly have the less room for error in the soybean balance sheet end of things. Again, I left the demand figures alone here in the Ag Outlook Forum numbers, and really it's completely unchanged because acreage was unchanged versus the Ag Outlook Forum in February. So coming out of that meeting, there was a 6.5% carryout to use. I dialed back yield here a little bit for folks to get an idea of what a lower yield, slightly lower demand number would be. Drags us back below a 200 million bushel carryout. And then I bumped yield here a little bit, but increased demand slightly for these numbers. So, you know, still going to maintain a relatively tight balance sheet in beans. I'm not the only guy out there saying that, I think, Isaac, but it's one of those that as you look at new crop marketing, especially as you look at the overall volume of corn versus beans at the farm gate, really want to sharpen the pencil as we go here into the spring. You know, see what spring brings, but adequately position oneself for the risk here ahead.
Yeah, no doubt. And obviously every bushel per acre on beans is going to have an outsized effect on what we see for ending stocks. So beans definitely going to be, I think, dicier going forward as we get into the planting season and the growing season. Obviously it's later in the year where typically we're seeing the bean crop either made or broke. So you know, there's more time for, I guess, market exposure in new crop beans.
That's a great point as well. Other than that, that's what I have here today. Thanks for having me, Isaac. And if there's anything, reach out to Isaac, and he'd be happy to pass any questions along.
No doubt. Thanks for coming on board, PJ. And again, yeah, feel free to reach out to myself or Warren or any of the location staff if you have any questions on marketing.